Markets around the world are calm and quiet, with little up and down movement day to day. But there may be pitfalls ahead. To help us discuss some of those, we're joined by Eoin Murray, Chief Investment Officer for Hermes Investment Management. Thanks for joining us, Eoin.
Good morning, Dan. Thanks.
So I think you've got a couple of charts to show us that maybe things aren't as sort of calm, or we shouldn't be as relaxed as maybe quiet markets were having us believe.
I think that's correct. And we've brought along a couple of charts here today for a selection of things that we are looking at. And the very first we have here is a comparison between the VIX, our gauge of fear in the equity markets, and a global economic policy uncertainty index. So the blue line is telling us that if we were really interested in political risk, then we should be really quite concerned at this point in time, certainly relative to its long period of history that we have here.
So give us an example. What might be feeding this uncertainty?
Well, there could be any range of things feeding it, Dan, whether we're interested in the States and political goings on there, or indeed through to North Korea missile testing, or China and the growing credit concerns that they're facing over there.
Okay, so markets are calm, but nobody really knows what's going on with the politics.
That seems to be the case, and indeed we could replace the VIX here with equivalent indices for rates, for commodities or for currencies, and we'd have exactly the same picture. The sudden disparity over the last year between those that focus simply on policy uncertainty and the markets.
Okay, so what's the next chart adding to this picture then?
So the next chart that we have here is, if you like, a little bit more backing for what we've been talking about and the potential for surprise. This is a measure that we call correlation surprise, and it's based on historical patterns of unusualness in asset prices.
So what does unusualness mean in this sort of context?
Unusualness can mean anything around volatility or correlations, but just unusual patterns in the data. And historically, we can see that when we've seen spikes in that index previously, it tends to precede some poor return environments.
So what is this here? Because I thought markets are supposed to be calm, right? Nothing very much is happening.
Exactly. So we're picking up in the data something that the markets themselves are not yet seeing, that we have this statistical unusualness in this is an equity index that we're looking at here.
Okay, and I think for your final chart, you've got something which might perhaps be, I don't know, is this a trigger or just something to watch in terms of a pitfall ahead?
It could be both, and it's certainly one of the key ones that we're watching at the moment, and this is the classic credit impulse for China. But indeed, if we looked at the global credit impulse, the pattern would be very similar, given that China dominates that metric.
And the credit impulse, this is sort of if the amount of credit in the economy is sort of expanding or decreasing, right?
Exactly. So it's the second derivative of credit. We're looking at the change in the growth of credit in China. Now, many people would look at it and say, well, that's not a bad thing because they've got so much debt out there, then this should be a positive. The problem being that the credit impulse in China is a classic leader of economic activity. And if we are seeing a downturn today in the credit impulse, then one imagines that in 12 to 15 months' time, and that's the sort of standard lead that we're looking at, then economic activity itself will take a turn down again.
Okay, so finally, with your chief investment hat on, I mean, so what's the conclusion? What should you do armed with this information?
So our conclusion and what we're recommending to investors is that they should just stay nimble where possible, stay high in quality, both in the credit and the equity markets, and don't get too lulled into following some of these trends, which could potentially reverse at a moment's notice.
That's great. Thank you for joining us.
You're welcome.